What is captive insurance? Sounds like an easy question. Let's see what it means. In Captives and the Management of Risk, we explain that it means that those who are using captives, buying captive insurance, are using an alternative risk financing mechanism. In other words, they're finding an alternative or different way of paying for their losses, different from the commercial programs that exist, the high deductible programs, the self-insurance programs. The captive insurance is an alternative risk financing mechanism. It may be set up in a single parent captive, a group-owned captive, a sponsored or rental captive, and there are many kinds of those. Regardless of the type of captive used, there are going to be certain common elements that all captive structures or programs have. And understanding what those are helps us to make the distinction between the captive and its other alternatives. So the first element, the risk will be financed in a separately incorporated and managed entity. Well, here I have to make one small note. There are certain types of captives called reciprocals that are not actually incorporated. They are unincorporated associations. But the key point is they are separate companies with separate management. They are not just simply part of a large insured's risk management department. So the first element is very, very important. There has to be separation between the captive and its insureds. The second element is that that entity that is being used to finance the risks of its owners and users has its own capital at risk. If it doesn't have capital at risk, it's not an insurance company. And therefore, you can't ever claim that you need to be treated as an insurance company for accounting or tax or other reasons. So the captive insurance company needs its own capital at risk. And finally, in the third element, those who are purchasing the insurance or reinsurance provided through the captive program are going to be sophisticated insureds. I do remember once when sitting down with a company that was looking at forming a captive, that the CFO looked at me and said, does this mean that to be a sophisticated insured, I have to listen to classical music instead of rock? And of course it doesn't mean that. What it means is quite similar to what it means within the investment world, when in the investment world there is a concept of there being sophisticated investors. It's those individuals or those corporations that have sufficient net worth and resources internally to make decisions about buying an alternative risk financing program. Without the elements that we have explained, the fact that the captive is a separately formed, incorporated, capitalized entity, that it has its own management, and that its insurance or reinsurance is purchased by sophisticated insureds, without those elements, you very likely could have simply a commercial insurance program or some form of self-insurance.